What's going on, guys? I'm gonna give it a probably about another 5 minutes, 5 to 10 minutes before we start. All right, guys, we're gonna give it 2 more minutes, 3 more minutes. All right, guys. Thanks for you guys who watched and joined in. Dealt with all the BS with the join me. Sorry about that. That's on me. I know we're supposed to start earlier, around 4 o'clock, but I do some last minute stuff regarding something else, so I had to go take care of that. But we're here now. It's 6 o'clock my time, Eastern, whatever time it is for you. I know it's live, but again, cool thing about YouTube, you can just keep it on record, and then I can record for however long I want, and it'll be posted onto the YouTube page. So just gonna go a quick rundown. I'm gonna try to make this at least an hour or less. Just want to give some tips, give some beginners some general knowledge, and hopefully we can make you guys become better traders. But I just want to start off with some notes before we even look at any charts and stuff like that. I know sometimes when I talk, might be a little too fast, might be a little too slow. So if you're somebody who likes to write notes or whatnot, just give me a message through the chat, or just give me a message on my email if you want the written out proper notes or whatnot like that. So I'll put all that information in the notes. And I just wanted to give a quick rundown what we're going to talk about today. And we're going to go over that, maybe open it up for some questions. You can comment on the chat box on the YouTube page, on the live section, or you can message me on the Slack group chat. Or, if any of you guys have my number and are watching this live, shoot me a text, and I can get back to you guys through the video. And if not, and if you watch this video later on and you have a question, for the next webinar or for the next video, I can answer them. And excuse me, I'm freaking eating right now. So, been a crazy day. So, trying to mash up everything at once. So, again, my bad if you hear me eating or whatever. All right, so we're going to talk about risk management. I know we talked about that earlier in a previous video on how to find the best stocks, but we're going to go a little bit deeper into that. We're going to talk about Stock 101. So what I'm doing mentally to prevent or keep my risk low. And for you to keep your risk low, you have to know some basics. So today's webinar is really for the the guys who maybe are in crypto and want to dive into the stock market, or if somebody's just curious about the stock market. I'm just going to give some general risk management information. So I'll probably start off with Stock 101 first, then I'll go into risk. After that, I'll actually do my my watch list for tomorrow for Monday, and we'll go over the charts and stuff for that, and we'll intertwine the risk management for those stocks. And it might be a little bit hard because I bought these stocks on Friday, but I'll tell you guys my thought process and whatnot going into my buys. And then we're gonna open up the last maybe 5 minutes, 10 minutes. 5-10 minutes to questions, Q&A. If there's no Q&A, I can end the video early. So yeah, we'll get into it. Stock 101 will probably be just basics, strategy, and styles. a lot of people ask me, "Are you a day trader?" And I'll tell them, "Oh yeah, I'll day trade a couple times," but I feel like not a lot of people really know what a day trader, a swing trader, a long trader, intraday trader. That I feel like they don't really understand what the differences are. So, knowing your strategy of trading is going to help you ultimately make the most money, because once you figure out your trading style, it's all about just fine tuning your style and becoming a better trader. So, like I said, we're going to go into that. I'm going to start off with notes, just because a lot of this stuff you really don't need charts for. So let's get started, right? So I'll try to bring in the charts as much as I can, but this is for people who just want to really get the general knowledge. And I just did this webinar out of multiple requests from people who wanted it. So what's a stock, right? We all know what a stock is. If you don't, I'm not gonna really give you the full definition. But when we talk about trading, we talk about buying and selling a stock. What kind of stock trader are you? That's one of the first questions you're going to ask yourself. I know a lot of people from crypto want to come over, or vice versa, and I always tell them it's a whole different ball game. A lot of people who trade futures or indexes, forex. They want to come in, they want to just buy stocks, but there's a certain strategy to buying stocks, right? So there's basically 3 different fundamental styles of trading. So you'll have your fundamentalist. So you're a fundamental trader. Fundamental trading, right? I have no idea why all of this is underlined. I'm not going to do that. So you have a fundamental trading. So these are your Warren Buffett's, or guys who are looking into the long term. So I always associate fundamental trading with long traders, and basically fundamental traders take into account so many things. They take into account the health, economics, and overall finances. Just can't spell finance. What the hell? All right. Take over overall and overall finances, and the basic day-to-day functions, right? So you're looking at EPS, you're looking at cash, cash to debt ratio, you're looking at balance sheets, you're looking at the health of earnings reports, you're looking at the future of a stock, right? Usually the people who are investing 401ks, or they're investing a large amount of money for the future. These are people who want to stay in a stock for 5-10 years. These are your guys who are trading blue chip stocks, Apples, Amazons, Googles, fundamentalists. These guys make money over the long term. Like I said, Warren Buffett, great example. He's one of the best investors and minds in the economy to this day. So for somebody who's a fundamentalist, a lot of people who are fundamentalists, usually butt heads with day traders or swing traders, and they say, oh, well, this stock is trash because, you know, the overall cash on hand to this and that, and, you know, the beta is this and this. And then you're like, dude, like, I'm not looking to have the stock for more than a day or two. So I'm not really investing in the stocks. And so people who are fundamentalists usually don't like to buy short term. They don't believe in it. They just want to have overall growth over time. And does that work? Oh, most certainly it does work. It's great. So, you know, it's less stressful. You know, there's less risk. You make your money over time. So it's perfect. If you want to be a fundamental trader, you're usually somebody who's a little bit older. You know, you already have your life basically set. You're looking at retirement or something like that. You're looking for something over the long term. You usually see fundamental traders, you know, work for these hedge funds and stuff like that. And you know, these are the big boys. These are the fundamental traders. Nothing wrong with being a fundamental trader. I'm just not one. I do take certain things actually from fundamental trading that can make me become a better trader, right? So it's always good to take all pieces of the pie and not just be so narrow-minded and not be able to, you know, at least balance, you know, multiple styles of trading. So the thing I practice is bringing in fundamental trading, you know, and then the other two styles of trading, and, you know, kind of making kind of like a hybrid style of trading, because there's so much information you can get on one, you know, one certain equity, or there's so many other things you can get. And just think about it in life, like, you know, you can't go one path. You always got, you know, dip, you know, different styles of a path. You know what I mean? Everybody can go to this. Everybody can get to the same point from point B, but, you know, somebody might take a different road, and somebody might take this road. But, you know, it's good to experience all paths. So, you know, think about it, girls, man. You gotta, you know, get a piece of every flavor, right? So, I like to take every style of trading. So, fundamentalists, great. One of the things I take away, as I said before, in my style of trading, I take away earnings beats, yard beats. I take in cash on hand. So I'm looking at if they're having some dilution going on, if they're having offerings of recent. And when I look at the ER beats, I'm looking at it over time. So, for example, NVIDIA, you know, they beat their earnings the past 9 quarters. That's crazy. Like, that's awesome. But thinking about it, you can look at, you know, how many cents they beat it at. You can see what Wall Street's estimating, you know, and then you'll see the, you know, the positive and negative reaction over time, because you get to see the history. So I like to take in that information. Like I said, cash on hand. I'm looking at beta, which is kind of like a technical style of trading, but beta is like your overall health of the stock. When you look at your beta, you want it to be less than 2. So when you're doing your screener, and you can look at the screener in my first video, how to find the best stocks. When you're using your screener, you want to put your beta less than 2. I think beta is a really, really good screener to use when you're looking for stocks. It really does kind of really like your fundamental number. Does all the fundamentals for you, kind of. But a lot of people who are in finance or econ or went to school for that know what beta is. It's really cool. So those are what I take in mainly when it comes to that. Also, I mean, just knowing your stock as a business is really important, because even though you're a short-term trader, you know, this company could be, you know, on the verge of bankruptcy, and, you know, a chart can't tell you that. So, You know, the stock may have a reverse split coming in a couple of days. Fundamentalists would know that. Maybe a technical trader who looks at charts all the time, like I do, maybe I might miss that. And you know, by the time I get into a stock and I figure out there's a split, I'm screwed because maybe I don't have maybe I don't have after hours trading, or you know, maybe I'm too busy in other stocks or other positions that, you know, I might just buy and forget about it and let my buy limit and, you know, sell limits, you know, execute on themselves. So just knowing your stock in general is rule number one. So when I say beta, sometimes the beta can't take that into account. So you want to look at bankruptcies, bankrupt / rev splits, so RS. And, you know, we talked about that in the last video when we talked about revenue splits and seeing them in pump and dumps. You know, fundamental traders would know that, and they would get in and get out, et cetera, et cetera. Revenue splits, you know, executive changes, and insider buying. So I use it to supplement my technical trading, which we'll get into next. But knowing all of this is basically the key for me as my style of trading. So I take into account all of this stuff, and I may not look at anything else because one, it might take up too much time, and two, I'm just not in it for the long haul. So when it comes to, you know, keeping my stocks over the long haul, I do look at fundamentals heavily. So like I'm heavily invested in Microsoft, or I'm heavily invested in BlackBerry. You know, I'm looking at certain things that I may not see on the technical aspect, but I see on the fundamental, and I might see something far ahead. You know, Warren Buffett got into Coca-Cola before Coca-Cola was, you know, what we know is today. You know, it was in Geico before it was what we knew today. So I'm looking for, you know, small things that can be big in the future. So I'm looking into things like IoT. Personally, I'm looking at immunotherapy. I'm looking into AI. You know, I'm looking into automation. I'm looking into companies that are focusing on that end, because in the next 10, 15, 20 years, that's where the future, at least my future and my generation, is going to be at. So fundamental trading is super important. So then there's technical trading. Right? This is what we do. This is what I do. I'm a chartist. So think of technical trading in association with swing trading, day trading, or, you know, momentum trading. Okay, momentum trading. So technical traders look at the data given on the trading platforms / software by brokers, or given by brokers, to indicate and identify chart, or to identify patterns in price action. So technical traders look at charts. When you look at you know, the candlestick method and all that stuff, that was really a method that came back way back. You know, we took it from the Japanese, and, you know, it was a form of measurement and measuring data. Think of it as like a Box and whisker plot. If you have any statistics background, which I'm sure most of you have. Just think about it as a box and whisker plot. Taking in high values and low values. And again, if you look back in my videos, we've talked about the charts and how much they can be really a big effect on making a decision on when to buy and when not to sell, and vice versa. So technical traders, are looking at the charts every single day. That's what I do. I look at the charts. I, get a cup of coffee, start scouring, looking at charts, and then I look at the fundamentals. Right. I use the fundamentals usually as like a check mark or a backup. When I want to make my decision. So you look at the data given on the platforms and software. So you'll have your Thinkorswim, which is right here. And then you can have your trading view. That is what I use for teaching. So we'll pull up trading view over here, and we'll have our trading view here. And like I said, you can the chart really does help you make so many decisions that you really wouldn't have known if you looked at Robinhood and you just saw a green line going up and down. It really doesn't make sense. And I preach this to all my students. I preach this to everybody that I talk to who are getting into stocks. I say the rule number one, if you want to be a good technical trader, if you want to be just an investor, a good investor, and you want to do this yourself without having your broker do it for you, is rule number fucking one, guys. Hold on. Rule number one: never buy a stock without looking at the chart. Never do it. I don't care if you don't know anything about stocks. I don't care if you don't care. You just want to go off what somebody's saying. If I say buy MYO, or if I say buy TNDM, CAPR, go buy it, man, go buy it. Like I said, we're going to talk about risk management. This is your money. This is your hard-earned money. However you got it, you earned that money. So for yourself, it would be the smart thing to do is use all your resources that you have available before you make that investment decision, because who knows, you could lose all your money in one trade. Just to be real, 90% of the people who day trade are not successful. They lose all their money. There's only like 10%. And it's a proven fact. Everybody knows it. I lost all my money the first time I tried doing this, and I learned the hard way. So I also realized that I never looked at the chart when I bought the stocks. I was just going off of. Never buy a stock without looking at the chart. Even if you don't know anything, you can know when a stock's on a downturn. So if somebody's saying go buy the stock, buy a stock, it's going up, 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 up. You don't really know how relative that is. Or if somebody's saying, buy the stock, it's going down, but it's going to go up. I probably wouldn't buy it if I didn't know anything about stocks. I'm not going to buy something that I don't know. And, you already just told me that it's going down, so why would I buy it? So just looking at the chart, even like on Robinhood, at least it shows you, something, right? So like I said, don't buy a stock without looking at the chart. The charts are really important. And we're not going to get into it. The charts, I'm actually going to start a series to teach people how to look at every single indicator. We'll be doing about 15 over the span of maybe 2-3 months. We'll be starting that pretty soon, maybe next week, just depending on which one I want to start off with first. But hopefully that platform that series will allow you to, look at it step by step without having it all in one video and being so much to handle. So number one, never look at a stock never buy a stock without looking at the chart. And there's so many free platforms that you can use, and whatever broker you use, besides Robinhood, you can literally have a software for looking at trades. So why not use the resources that you're paying for anyways? So look at that. The platforms, again, you can look at are Thinkorswim, which is one of the most popular. That's with TD Ameritrade and TradingView because it's easy on the eyes and it's cheap. .com. So yeah, technical traders look at estimated moving averages, relative strength. They look at, MACD convergence. These are all technical indicators, right? They're looking at vortex indicators. They're looking at different oscillators. They're looking at volume, which is the number one factor even in fundamental and technical trading. So remember, volume is key, major key. They're looking at average volume. They're looking at a lot of things. So if you want to be a good technical indicator or technical chartist, you either got to be like a finance guy, somebody who's really into patterns, into seeing, trying to predict those patterns, taking information. There's some math you can use as far as statistics and series testing. If you really want to get into it, you can you can get well versed in Pine Editor, so you can start making script, which is what I'm doing. So I'm taking into account a lot of the technical aspects. So like I'm a nerd at heart, but I'm trying to use that to my advantage now because I've taken so many science classes, I've taken so many statistics classes, starting to figure out that there's an association here. So taking to account all this raw data, because look, you have so much data. You have so much data from God knows how long. I think TradingView goes back to like 1996. So you have so much information on the stock, and really looking at the stock on the 52-week level and seeing the big picture from the outside really does change your perspective on a stock and really makes you think, hey, now I see the big picture, or hey, I might see the small picture. So if you want to be a technical chartist, it's definitely going to take some time. Don't get too discouraged when you start looking at technical charts, because it's a lot to handle and it's a lot to take in. But if you just take into account each and every indicator and you start practicing one day with one indicator, another day with another indicator, you'll soon be able to put all the indicators on the same chart and be able to just kill it. It does take a couple months to really get good at it. It took me about 6 months to really get the swing of it, and started making like really good money. But I do think that technical trading has been the best style of trading for me. Like I said, I don't have really big economics experience, so my fundamental trading may not be the best because I may not understand the concepts as well. But there's so many resources that you can use to teach yourself. Like we said right here about Thinkorswim and TradingView, as far as the technical aspect. If you want to learn more about a stock or learn anything about stocks, Investopedia.com is one of the best resources to use. You name it, they got it. I mean, they have everything as far as researching and thinking, even technical indicators. They have the official description of all these technical indicators. They may be a little bit way over your head when you start reading them at first, but if you pair them up with videos plus practice, you start to get a hang of what's going on. And there's math involved, but you can bring it down to layman's terms and bring it into colors. Like if this line crosses over this line, you'll see a positive increase in pricing and whatnot. So yeah, we're at technical trading. And then the last one, I know I said we talked about combining all three, but descriptive trading is more of a screener kind of thing. So the descriptive trader is looking at specifics, looking at specific User metrics, pinpoint ideal stocks, which take into account fundamental and technical series. So a descriptive trader is taking something super minute and trying to make a big deal about it. So if I'm a descriptive trader, I'm a guy who's like taking into account both trading and fundamental trading, and I'm looking for a pinpoint on what I want to buy. So if I'm a descriptive trader in biotech, okay, I'm looking for biotech stocks, super descriptive. So you're saying, okay, I'm looking at biotech stocks at $1 to $1.50, and I want them to have a certain type of technical pattern, like a inverse hammer. So really, I want to say it's like doesn't matter, but descriptive traders have their own niche. It's just a niche. I could consider myself a descriptive trader, but I'm not that narrow-minded. So I take into descriptive trading when I'm looking for my screeners, or when I'm inputting stuff into my screener, looking for stocks under $15. But that's really it. So there's that. And we're going to go back into technical trading. So technical trading can be associated with swing and day trading. All right, so what's a day trader? Day trader, it's super simple. You're buying, selling stock same day. You don't have $25,000 in your account, you probably won't be a day trader. Like I said, so 25,000 is the minimum you need in your brokerage account. If you're on Robinhood and you don't have your pattern day trader protection on, so the rule is called the PDT rule, which stands for pattern day trading. You might get in trouble with Robinhood. They might boot you out for 90 days, which is what happens to a lot of people, and they don't really realize that there's a rule. Like I said, we're going to go into that and to risk when we talk about buying and selling stocks. But if you're a day trader, you're buying and selling stock the same day. Nothing too fancy about it. So a lot of the popular day traders you may know is Tim Sykes, great marketer. I don't know if he's actually trading anymore at this point, but he's like one of the OGs for penny stock trading, quote unquote. I don't really trade penny stocks. I don't think they're safe. They're highly manipulated. Like I said, I'm usually buying stocks that are $4 or higher. Tim Sykes, the Day Trade Warrior guys. Warrior, I guess Clay Trader. I don't know. Yeah, I guess he's popular. A lot of people follow him, so I don't know if he's popular or a lot of people don't like him. A lot of people like him. I don't know Clay Trader personally, so I guess I'll mention him. But Day Trade Warrior, I think everybody who I know knows Ross, Cameron. They have their own pages. They're pretty good. They have a lot of money. They have a lot of subscribers and people who are rolling with their whole team and whatnot. So they're making a lot of money off subscribers, not to mention trading. So they're doing pretty well for themselves. Those are the popular guys. With day trading, you're buying and selling stock in the same day. You need 25K. Way to get around that, you might want to use an offshore broker, so like SureTrader. I think the limit is $500 to have in your account, and there's some fees. You can use Robinhood, but again, you're limited to three trades a week. 3 day trades, sorry, a week. You can only day trade 3 times a week. So think about it. You can buy and sell one day. You already have 2 trades given up, so you only have 1 trade left. So a lot of people, kind of can't keep track. So that's why you need to have your tracker on Robinhood. $0, obviously, it's free for the commission. PDT rule still applies. You can use Ustock trade. And that's $0, I think. I think it's $1 a month. And then $2 overall per trade. So it's you buy it costs you $1 when you sell it costs you $1, so $2. That's how I do it because I have a couple Ustock trade accounts that I'm managing right now. So yeah, $2 overall per trade. Off the top of my head, those are the only ones I know that let you get around the rule. But the PDT rule is there for people not to lose all their money. For people who are not experienced or trained. That's what they say, but I'm sure there's another reason why. So there's day trader. So then there's which I do day trade. I don't like to do it, but sometimes there's opportunities where stocks are just flying, and I want to kick a little bit and get some money. So I'll day trade, but I'm primarily a swing trader. So I'm buying a stock, buying and selling a stock is what I should say. Buying and selling a stock on I want to say 1 to 2 weeks. Sometimes I'll buy a stock one day and sell it 4 days later for like 100% profit. So the thing I like about swing trading, so usually all the calls you'll see on my StockTwits or Twitter, there'll be maybe 2 to 3 day holds, and then I'll sell like on Friday. And I'm taking into account a lot of things, so I'm really, really hesitant on all of my trades. I usually don't like to. I like to manage my risk pretty well. So when I swing trade, I'm usually looking to gain 30 to 40% return on my investment. So that's the goal. That's what I'm willing to do. And the positives about swing trading and day trading, there's cons to both. So there's the pros to day trading, quick money. It's a quick, fast money. If you can catch it, you can get some big returns. It's I guess it's a lot more fun because I guess you get that rush, you get that sensation where it's like, oh God, I'm making so much money so fast. When do I get out? It's like it's perfect. It's the perfect thing for a gambler to use, like to be like people who gamble would love to be day traders because the rush is crazy. I remember when I first started day trading, I was so hype. But yeah, quick money, big returns. It's fun. Cons. It's quick money, but you can lose your money fast. Big losses, and it could end your investment career. I know a lot of people who just throw all their cookies in one jar and just cross their fingers and hope this penny stock goes up 40 cents. And then it ends up crashing or going OTC, and then they lose all their money, and then they're done. So those are the pros and cons. Swing trading. Pros. Less stressful, I think. I work a full-time job, so for me it's less stressful because when I come back from work, I'm just looking at charts and managing hustle trading, and it's less stressful to keep an eye on a stock all day because nobody wants to be in front of a computer screen that long. You really want to predict your timing well. You really want to put some time and effort into it. So I put my time and effort into my calls because one, like I said, I'm looking for that 30 plus return on my investment. I'm more than like 65-70% sure on all my trades, And I would hate to be like 50-50 on the trade. You know what I mean? It just sucks. So it's less stressful. And the 50-50 call sometimes happens in a day trade. Like people just say, oh, it's a gamble. I don't really like to do that. I mean, I work hard for my money. I'm not really trying to lose all my money that quick. So it's less stressful. You can get out relatively easy because usually the stocks that I pick aren't really on momentum. They're about to be on momentum. So I get in like a day or two early, and my risk starts to decrease every time the stock gradually increases. So I'm looking for gradual increase as opposed to spikes real quick. So then I have that cushion to say if if the stock does crash, I can get out with some sort of return. Like I said, and it's still enjoyable. It's fun. Cons. So you do miss out on day trades if you don't have the capital, to play around. Maybe somebody's only trading with $1,000. If they're in a swing for a couple of days, they may be all in that stock, or they may be 60%, 70% into that stock, and they might not have enough money to even make it be worth it for them to buy that stock that's hot. So you do miss out on some calls. It is long. So you may be sitting on a stock for a week, but it's like, what are you willing to risk? Are you willing to risk it to play stocks that are hot now, or are you willing to give up 2-3 days of trading to make 40, 50, 60% on a trade? It really is all up to who you are as a person and who you are and how patient you are. So it is long, doesn't work well with people without patience. I mean, that's really the bigger cons. Day trading, also your stop losses hit all the time, and we'll talk about that in risk management. But they hit all the fucking time, and sometimes you might get kicked out of a trade, and now you're screwed. So stop losses suck. So now that you know the types of traders, and there's momentum traders, so they just basically trade based off momentum, or trading the stock's hot. So like DCIX last week, or Tops, those are guys who are playing the momentum. Those are momentum traders, intraday traders. So those are the types of traders. But that's about it. I mean, for me, I just really wanted to get the point across of knowing how to trade differently and knowing the styles. Because if you don't really know this, you really aren't gonna be, making money. You have to know this stuff. Even the small stuff, like even knowing like what brokerages have, what rules and stuff, you can start to figure that out. And when I say that, think about it. If you're restricted on the PD2 rule, let's say you can't open a strict trade account. Let's say you can't open Robinhood. Let's say you can't open Ustock Trade for whatever reason. If you knew about the PDT rule, you can think about it this way. Hey, okay, I'm going to open 3 different brokerages. Now instead of having 3 day trades, now I can have 9. Or I can have 4 brokerages. Sure, it may be really shitty to like deal with all those 4 brokerages when you're making your trades, but now you have 3, 6, 9, 12. You have 12 day trades, which is more than enough per week. So, knowing the rules and knowing how, then you can start to think like a trader. Traders are always adapting and moving. We're like an adaptable breed. So we're always moving, we're always changing, we're always figuring stuff out. So for you, it's always good to be on the go and be knowledgeable of what's going on. So we talked about that. We're just going to go switch it up real quick into risk management. I know I talked about it before in a video. And, if you want a risk management plan, I do offer lessons for $20 an hour, probably the cheapest guy out here. I really value just teaching and teaching this stuff to people, while making a buck. But if you only want a risk strategy along with figuring out what the best strategy is for you, I do one-on-one sessions where I go even deeper into these concepts. This is just a broad, like I said, it's a webinar, it's free, so just trying to give you guys some information so you guys can be the best traders you guys can be. So we're going to talk about risk real briefly before we go into the watch list. So remember we talked about looking at the damn chart before you buy a stock, right? Never buy stock without looking at the chart. This all plays into risk. When you say, all right, Mo, I found out what kind of trader I want to be. I want to be a swing trader. I want to be a day trader. I want to be whatever. I'm going to be like, all right, great. What's your risk? What do you mean, Mo? Your risk ratio or your risk assessment is what you're willing to lose, gain. Remember that. Every time you buy a trade, every time you buy a stock, you gotta do math in your head. That's how I calculate my risk. I just do the math in my head. I just say, hey, if I have $1,000, the stock is flowing here and there, I'm willing to risk, $50 to gain whatever return that I'm looking at, whatever it's 50, 60, 70% return. I'm looking to gain like, $150, $160. I'm gonna put X and X amount. There's a calculation for it. Forgot what the calculation was, but you can look it up on Investopedia. But basically, it's what you're willing to lose to gain. And you can't calculate your risk without looking at a chart, at least for me. And that's what I teach to everybody. That's what I teach to people, or what I say when people ask my opinion on risk management. When it comes down to it, this is your money, guys. Remember that. Remember that this is not nobody else's money. This is your hard-earned money. This is wherever you got your money doing from. And think about risk management. Think about advice. Think about where you're getting your information. Is this a reputable source? Is this an old article? Is this chart in the 30-minute? Is this chart in the daily? Is the stop loss the best plan? Is it buy plan? Do I buy on the bid? Do I buy on the ask? Or do I sell on the ask? Or I'm sorry, do I sell on the bid, buy the ask? Or do I set a buy limit? These are all things you have to realize. So how do we manage our risks? You set buy limits. You set sell limits. So stop loss. AKA stop loss. Stop loss. You try not to buy a market. So you try not to buy the ask. And you do God, I can't say it. And you do your due diligence. So I'm a swing trader, right? I'm constantly selling buy limits and sell limits. I'm constantly looking at a stock. I'm looking at a chart. Let's say I'm looking at QBAC that I've been looking at very, very intensely over the past couple of weeks. I'm looking at QBAC over time. So this is my watch list, so you guys can write this down for about a couple of weeks now. And a half, if not more. But QBAC, you can see filling in the gaps. I'm looking at my risk. I'm saying, I'm putting $3,500 into the stock, right? Which is what I'm doing. And I'm saying, I'm seeing patterns. I'm assessing my risk. I'm assessing off history. I'm seeing the patterns floating. I'm seeing the sign action, the beautiful sign action down here over time in April, May, June. Had a little bit of a reversal right here all the way to the top, reaching up to 12. Then we had another reversal coming down here, and now we have a gap to fill. So for me, I got into the stock at $8, right? And I'm saying, what's my risk? You look at your resistance points, you look at your support. My risk was pretty low. It was bouncing off the EMA. And now the stock is at $9.54. It highest reach was $10.20. So, and you know, there's still room to grow. So I'm hoping into next week. So what was my risk? My risk was a certain amount of money. I was willing to lose $600 to make whatever amount I'm trying to make, which would be at $12. I forgot how many shares that I bought, but like I said, I'm looking to make some, you know, hella bread, but I'm making sure that I'm setting a buy limit and stop loss. So I had the buy limit set at $8.20, something like that. Sold it. I had the buy limit at $8.20. I had my first sell limit at $11.50, just in case a reversal doesn't have a confirmation. Then I have my next sell limit at $12. And that's what I'm going to get into next, is scaling your positions as well. If my computer worked, there we go. Scaling positions. So when I said I had a buy limit or a sell limit set at 11.50 and then another one at 12, you're saying, hey Mo, you're not selling all of your stock? No, I'm selling 75% of my position. So you had 100 shares. I'm selling 75 shares at $11.50, and then I'm selling the rest of the 25 at $12. So now, if you scale your position with your buy limits and stop losses, now you can start to, hey, now I'm securing the bag. We talked about earlier, secure the bag. You say your stop loss. Say your stop loss, percent. Increments. And let the last, so I do by 25% and do whatever makes you happy, but think about commissions and fees. They add up. So the ideal would be three increments. So like 50, 25, 25, or 75, 25. Let's say you want to do 25, 50, then 25, and it's all up to you. Or 25, 25, 50. But I do it increments to limit my risk, because let's say you bought the stock, and it's happened to so many people. They buy a stock and they sell it like it goes up like 100%, and you're like, oh hell yeah, I'm about to cash out. Cashes out, goes up another 100%. Now you're thinking, wow, I feel stupid because I just sold out when I could have made 200. That's not the best mentality to have, because you still made profit. But how you gonna that? Scaling your positions at percentages. So if you had that percentage, let's say you sold when it was at 100%, you sold maybe 50% of your position or 75%, and then you let the rest ride. Now look, you're making full use. And let's say it goes down, you still made your money. It's basically riding the house money, and you have a cushion because you got in, 100% of the price earlier. So sell buy limits, or make buy limits, have sell limits. Try not to buy at the market price, the ask, which is what the person who has the stock, or the basic instances for brokerages and how that works. You make the buy order, it goes to the broker, or it goes to the bank, then goes to the broker. Broker goes, buys the stock, yada yada. You don't want to buy on the ask, because sometimes the ask might be too high and the spread might be a little bit too much and not be in your favor. So selling a buy limit either is one, you may not get the buy limit and you may miss out on the stock, but having to recoup your losses from buying on the ask and covering that spread, may be more of a bitch than you think it is. So Don't get mad if you don't get a buy limit that doesn't execute. Same thing with sell limits. Have your sell limit because maybe the bid price may be too low, because that's the bid. That's what somebody's willing to buy your stock at. So, people are always trying to get stocks cheap. So, incorporating these risk management tools are the best ways to really manage your risk. Also, doing your own due diligence is very, very important. Um, you know, I hate to make up a drug reference, but think of somebody who comes up and you go to a new town and let's say you graduate college, you go to a new town, some guy tries to offer you, someone says, "Oh yeah, man, I'm selling some weed." Let's say you're looking for weed, and you find this guy, goes, "Yeah, man, I got the best weed on the block." That's what everybody says. So what are you gonna do? Are you just gonna buy and just maybe he's selling you something that's laced, or maybe he's selling you some trash, or maybe he's selling you mids or something. What are you gonna do then? How do you determine? How do you do your due diligence? You ask around. You'd be like, "Hey, so and so is selling here, selling there. You ever heard of his stuff? Is it good? Oh, nah, man, that shit is messed up. Don't buy it." That's you doing your due diligence. Now you just got out of a situation that you could have potentially not want to be in. So doing your due diligence, just think about it. Yeah, just think about it as buying weed. I think associated with the stock market sometimes. That's just to show you how easy it is to bring in regular terms, regular concepts into buying and selling. That's just brief on the risk management, and that's about it. I'm going to take questions in 5. I'm going to give everybody a break, and I'll be back in 5.
Sorry. Is that little?
All right, back here. So we have Mo. What's up, Mo? Is 3% a good stop loss? So are you asking 3% of the overall price or 3% off your price target? So that's a good question. I was kind of like a question back, but I'll show you how I calculate my stop loss, and you can go off there. 3% is on the lower end. I usually do 3 to 5%. But yeah, so I'll look at my potential gain and I'll take the percentage out of that. Do you focus more on swing trading or day trading? Also, what is your preferred trading platform from Najib? Hope I pronounced that correctly. I focus more on swing trading because, like I said, it's less stressful. It's really more practical for somebody who has a full-time job. Somebody who is busy during the days and can't trade, and has a lot of time at night or during the end of the day, and can see and pick up patterns. So for me, I prefer swing trading. I don't really like to day trade because one, that starts to take all my attention back into the screen. So like when I'm looking at this, I might have to change from the daily aspect and I have to look at the 1 minute chart. And the 1 minute chart is insanely crazy because you see all these dashes and stuff like that. And it's really intense to pick up on. So I like to I like to work smarter, not harder. So I really think that swing trading is the best way. And then you asked me what platform do I prefer using? It all depends, dude. When it comes to trading specifically, I like to use Thinkorswim, so TD, to execute my trades. UStockTrade, I have UStockTrade, and I do that for kind of like my paper trading. I wouldn't say like, because it is actual money that I'm using. So it's not a paper trading account, but it's like a smaller account. So I don't really have to worry as much. It's just something that I use to practice my methods. So if I would say I put the top 3 would be TD, Fidelity, then UStockTrade. UStockTrade is a lot cheaper. Sure, they don't have certain tickers, but for the most part, it's pretty straight. They don't have after hours or pre-market trading, so you kind of get shafted there. But TD, for the most part, does its job. Thinkorswim's not a great platform. Like I said, it's right here. Also has CNBC, so you can have CNBC or Bloomberg playing while you're trading and stuff like that, so you can hear new information when the market's going. We'll look at the Slack message, see what people have there. I also offer one-on-one lessons, so if any of you guys are interested in that, just hit me up at hustletrading@gmail.com to schedule, or you guys can go to my website, schedule alerts, or you can schedule one-on-one sessions. Also, if you're a Pike and you're listening, I'm gonna do a discount for you guys, so let me know if you guys are interested in having one-on-one sessions. What are your opinions on? So I won't be giving any ticker opinions right now. More on the scene of conceptual stuff, not tickers at the moment. Sorry, Jim. Sometimes I buy a stock and I feel that I'm stuck and wondering if I should sell and move on. I don't know if that was a statement or a question. Rooney, I think that's your name. Sorry if I didn't pronounce it right. I guess to just go off your statement, man, you gotta know when to sell. You just gotta know when to sell, and that's why I say you gotta set your buy limits and stop losses. And if you can't muster the courage to press the sell button, having the computer do it for you is a lot easier. So you know, I would say practice using your stop loss, and you know, I know sometimes it's hard to just make them look like numbers on the screen, but there's a point where it's like, hey, this is your money here, so you don't want to really mess around with your money. So and you need to know when to get out and cut your losses, minimize your risk. So I would say, just set your stop loss and move on. There's a lot of other stocks out there. How much money do you trade with? Kind of a personal question, but I do have enough to trade with the PDT roll. So yeah, if that gives you a representation. I have like about 29,000 that I use for Thinkorswim. And then collectively, like on UStockTrade, maybe 5 to 6K. Yeah, and then I also have other accounts as well, but that's with work. So you're looking at Fidelity stuff, the stuff for like actual my life, like 401k, health flex benefits and stuff like that. So that stuff I don't really touch. They usually just have a set portfolio, and I could mess around with it, but I don't really want to. Let's do one more. Who are my favorite guys to follow on StockTwits? I follow a bunch of people on StockTwits. I mean, it's StockTwits, so you really can't really take it to heart. But I don't know, man. I follow, like I said, I follow a lot of people on StockTwits. Let's see. I'll pull it up on my phone. I follow Kuba, Kubaw. He was pretty cool. He stopped posting on StockTwits. I guess he has his own thing now, so I don't really keep up with his stuff anymore. But looks like he knows what he's doing. He's a good chartist. He's definitely pretty chill. He's from Raleigh, so. Who else? Monster Calls. He's cool. Kind of hard to understand, but language is not really a barrier. I've watched a couple of his webinars. I think he's like from Russia or something. But he's like really good on small cap stocks. He's really quick for this entries and exits. So if you guys are really like following him, you gotta be really quick on your buy and sells. But like I said, don't just follow somebody blindly. He offers a free chat room, which is cool. Like I said, don't know the guy personally, so never really messaged him or anything like that. So he's cool. Not really sure what else to say about him, but yeah, it seems like he knows what he's doing. Also follow Cam the Man. He's pretty chill. AC Investor Blog. He's pretty good as well. And just a bunch of randoms, man. I like to have StockTwits. I'm not really subscribed to that many people, but I like to have StockTwits just to see what's popping. Their heat map's pretty cool. So that's it. Wait. Najib said, been following you on StockTwits and your entries have been really spot on. Do you plan on covering that in your web series? Could you give me some tips on how you look for your entry into a stock? Yeah, so what I'll be doing with the web series is what I'll do is I'll be posting the indicators and then working on from there. My entries are really in depth when I'm looking into them. I look for certain things, and when I mention them, it's kind of hard for people to understand because they don't have the experience or they're not really well versed in the technical aspect of things. So my web series is really just going to cover how to find these stocks, and how to really make a solid prediction on how to find a certain stock, and how to assess your risk with it. So like all my stocks are assessed on my risk. So I mean, if you've been playing my calls, they may be different as far as risk wise. So but yeah, my web series will definitely help you cover and hopefully help you be similar or have similar plays to mine. The goal is to have this information and be able to pass it along, and maybe hopefully these people or you guys can make the same calls without my help. But yeah, so we're gonna wrap it up with questions. Thanks you guys for question. Watch list for tomorrow. I have QBAC, ticker QBAK on my watch list. We're looking at the 30-minute time frame. We're looking at the green line. Green line is your resistance points. As you can see, we had a couple bounces over here last week. We had a break on November 3rd on the resistance line as the EMA trended upwards. Now we're seeing the predictable motion right here, from coming all the way out and coming back in. You'll know there's some gap space to fill. So we're looking at the curve structure, the tightness in the Bollinger Bands. We saw a spike at the end of the day on Friday, and now it looks like we're going to have a little curl action going on. Vortex is pulling away on the Vortex negative. So we have the red line going away, indicating there's going to be less selling pressure. Volume looks like it's going to pick up soon next week. Reported its fiscal third-year results, pretty decent, and I really have good hopes for QBAC over the next week or two. So keep on the lookout for this stock. I really have a price target here at 11.50 to cash out at 75%. I could cash out now. I'm already up $1, some change, but I really do think that this is the next KALV, in my opinion. So I'm gonna keep on holding. I might adjust my stop loss accordingly. We'll see what happens. Next week, a good week. It'll be definitely the point to make out if there's going to be that big jump. Like I said, looking at the daily, we'll see that there's little spurts of curves on the MACD convergence, and then we're in the the bottom part of this curve. So just needs to break that 70 RSI on the daily, and we can see a big peak. We need that accumulation to rise as well. Like I said, we'll see. Something I'm going to keep in mind for next week on my holds. Ticker MYO looks like it'll have a little comeback from its spurt last week. MYO, I think, spiked from $4 up to $10 last week. So we're looking for another, and I'm sorry, this is I actually predicted this jump on the ERB, but now we're looking at a retest. But to really look at it, you're gonna have to see it on the 30-minute time frame, and you can see that there's some stoic action going on. And what we know about Bollinger Bands is every time they squeeze, we're gonna see a breakout occur in the negative or positive direction. We've already had that breakout from the squeeze before, right here. So we had a 1048 spike from a Bollinger Band squeeze earlier. So now we're looking at it on the 30-minute time frame, and now we're seeing, hey, I got in at $6.37. Right now it's flowing around $6.65. I really like stoic action. I really like when there's nothing going on because there's no risk, because the Bollinger Bands are so tight. So you're going to be dealing with low risk, high reward to fill up the cup and handle. Broke equilibrium on the other volume order indicator. It's tiptoeing on the MACD at the 0 point. Again, it's at the equilibrium. I have really high hopes. It's in the positive RSI range. So we'll see what happens. I think cup and handle can be formed. So this is going to be on my watch list. My entry was 637. Looking for my first exit at $7.32. And then I'm looking at my next exit going to be at $8.80. And then my next exit would be ideally at $10.74. So we have 3 exit points here, 7, 8, and basically 10. So look out for MYO to hopefully get a little volume push. The volume on Friday was at 310,000 on average volume compared to 1.15 million. But that was based off of the ERB. So we'll see what happens next week. Great play, great opportunity, low risk, high reward. Another risky play, RLOG got in at 65 cents. I saw the curve after the big pump, as you can see here, up to $2 and up to $2 almost. I think it broke out to $1.92, $1.91. Another play with Stoic Action on the RSI, looking to fill another cup and handle for another pump. Volume was at 5.5 million, a lot lower than its average volume of 11 million. The spread's large for the day range. It went from 68 cents to 85 cents. Could have cashed out at 85 cents, but I think this is a play to keep until $1. I'll be swinging this and see if this MACD can push forward up over the equilibrium point of 0. I'm also looking for the RSI to again fill up the cup and handle similar to MYO. Along with the vortex, you can see this is the crisscross action. And I also have that little cushion. So I have a stop loss set at 67 cents. If it hits 67 cents, I'm bounced out. Not a big deal. It's a penny stock. But my ideal target is to exit at $1. And then next stock will be Fred. I had this reversal called out in one of my group chats. I like it based off of a reversal play. So having a reversal. So I saw this becoming a reversal play around here. I just needed a confirmation. Thing is, Fred looks like it's already gained most of its I guess gap space that I could fill. Of course, it could go up to $5.51 to fill in the gap, but we have to make sure that this EMA, this estimated moving average, is bounced off. So we're gonna make sure that this next 2 or 3 candlesticks bounce off this red line in the middle of the Bollinger Bands to see the next leg up. I don't have a position in Fred, but I'm going to be looking at it really, really closely to see if we can get the bounce off the EMA. If so, we can see, we can see a spike up to $5, $5.15, $5.20 for a nice little solid gain. Another ticket to look at, CAPR. Call this on StockTwits. I don't know if anybody saw or not. If you did, hopefully you guys made some money. I've been holding CAPR for a little bit now. And you saw the spike after the earnings report. You can see accumulation is rising. Might be some insider trading. Haven't seen anything yet, but it had a really, really strong close. Could be a gap and go potential play. I think the actual after hours close was $2.59. So I really do think Capper might have a strong week next week. We know this stock can bounce pretty high. $3 might be a good target price. I would take out my first target at $2.60. Then my next target would be at $2.80, then $3. Next stock and last stock for my watch list tonight is going to be TNDM. TNDM was a big stock last week that I was definitely bullish on. Just based off the reversal. It was another play with Stoic Action. Remember, consolidation is really what you want to see in a stock to see the next leg up. A lot of insider buying at $3.50, like we all know. Been heavily advertised about the insider buying. Now we're starting to see the accumulation start to rise along with the vortex, along with the RSI, along with the MACD. So everything looks like it's good to go here for a nice little run next week. There's a conference meeting at the Stifel 2017 Healthcare Conference in New York. We'll see if the Tandem Diabetes has something up their sleeve. Maybe that's why the executives were buying so much in October. Maybe they knew something we didn't. If not, like I said, the technical aspect as of a gap and go play, we see it here. I got in my entry at $2.27 when the Stoic Action was going on. I'm looking to exit on my first exit was $2.75. that filled in last Friday. So now I have 75% of my position still in TNDM, looking to cash out at $3, and then I'm going to let the rest ride at $3.50. So that's my watch list today, guys. Hope you guys enjoyed the webinar, and I'll post my watch list along with the chart analysis on my webpage. If you guys want a lesson, let me know at hustletrading.com. Also, you can email me at hustletrading@gmail.com. That's it, guys. If you guys like the video, comment, like, subscribe. Be on the lookout for the web series. Again, if you guys have any questions later on, let me know. We're going to take a quick peep at the YouTube page, see if anybody had any questions. All right, I think we're all good, guys. I'm going to call it off for the night. Hopefully you guys enjoyed it. Have a good night, guys.